Top Picks is brought to you by Questrade, where you can trade stocks from 1 cent and buy ETFs for free.
Okay, and we have those top picks of David Burrows, the president and the chief investment strategist at Barometer Capital Management. He's got a couple of themes going here. Archer Daniels Midland is one of them. ADM, you bought this most recently in August at $50.
Right, so ADM is a beneficiary of this huge crop in corn and wheat. Prices for the product are very weak. All they do is process, so it just comes down to volume for them. They've come off 2 years where you had drought in the U.S., so their earnings were depressed. They have become very efficient to deal with that. Now they've got a bumper crop and likely to have much higher volumes. This is a company that generates a cash flow yield of almost 8%, and they're very shareholder friendly. They've grown their dividend almost 15% a year over the last 4 years, and that's likely to continue. So unless you think commodity prices are going to really race higher due to a shortage, then this is one that will continue to benefit.
All right, next up here, similar theme, different sector, Tesoro. You bought this as well most recently in August, just over, well, under 64.
Right, so they're an independent petroleum refiner. It's a very interesting dynamic in the refinery industry in the U.S. There's all of this oil and gas that needs to be refined and used. You cannot ship crude out of the U.S., but you can ship refined product. So they have a low-cost base for their product. They're able to sell some product outside of the U.S., and they're a beneficiary of low inflation and low cost pressure. And this one, again, should be able to grow their earnings very nicely as they go forward.
And your other top pick here is Home Depot. You bought this just a couple of days ago at around 93, so clearly linked to the U.S. housing market. Do you expect another leg up? It's going to start picking up? Or is this more renovation?
So first of all, this is a consumer story. So the consumer is in great shape. They haven't spent money on their homes in a long time. Home Depot got stronger through the downturn and came out the other side in a very dominant position. Their financial metrics have been getting better. They are incredibly shareholder friendly. They've been buying back an enormous amount of stock, and they've increased their dividend also about 15% a year over the last 5 years. So as consumers are spending more money, Home Depot is a recipient. They have a great counter to the internet trend in retail, because you got to go into a store to buy lumber and to get advice. So they don't get hurt the same way as other retailers do due to the trends in internet retail.
All right, so a recap here. Home Depot, Tesoro, Archer Daniels Midland. Those are the top picks of David Burrows. Also, as we said off the top of the show, he holds Apple and has for a long time. So we have 2 new phones here. You're excited, or I can't speak for you, but you like the fact that they've come out with this mobile payment system, Apple Pay, in the U.S. initially. They're going to roll it out into other countries eventually.
Yeah, this is going to be a big growth opportunity for them.
Can you give us some more insight into, because I've heard they may make, what, say 5 cents a transaction, which is small. So the drop down to the bottom line will be incremental.
It just allows them to lever off the infrastructure that they've built in the iTunes and Apple Store. They have all the payment information already for their subscribers. It will help cement their market share. And it opens up a growth opportunity to be a retailer, and I think that's going to be to their benefit.
And we saw a spike intraday on the stock, almost up 5%. Now, thanks, David.
Thanks very much for
Great stuff for doing a double duty there. All right, thanks a lot for joining us, and stay tuned now. We have Catherine Murray to bring you a Business Day PM. We'll see you later.